You're losing money in the stock market. And the reason is probably because you're not taking enough losses, if that makes sense. Everybody talks about how you need to know how to take losses, you have to be okay with taking losses, but let's actually break it down and let's put it into a business perspective. So you're trading. You want to be a trader and you're learning how to trade. All right, whether that's through self-teaching, whether that's through courses or books or a combination of everything, it is your goal to become a self-sufficient, profitable trader, which means that you need to be able to generate money. So when we talk about losses, most people just tell you that, look, losses are part of the trades, losses are going to happen, and it's just something that you need to be okay with. But that doesn't put your mind in the right place if you want to be able to take these losses. So what we teach here at Finance and Chocolate, and I think that's a very important part, is we're trying to build a strategy that has a statistical edge, right? And that is statistically proven to make money. So we're trying to build something that is as close to guaranteed as possible. The only way to do this is to know your numbers. But in order to know your numbers, you have to run those tests. Now, let's talk about it from a business standpoint. Apple or Google or any business, any mom and pop shop, anything, any sort of business, what do they have? They have revenue, right? And then they have expenses. No business is going to turn a profit without expenses. You can go out there, you can go analyze some balance sheets, you come back with your research, and you find me a business that generates profit without expenses. All right? In your trading, it's going to be very, very similar. How do you expect yourself? If Google and all these big companies, they all have to generate profits through expenses. So through pay, through the cost of goods sold, all these different things they need in order to make that profit. So when you're trading, you don't have those expenses. You're not selling a product. You're not making a product. You probably don't have overhead unless you have some crazy day trading office or something of that nature. So where are your expenses coming from? Your expenses are your losses. Of course, they are your commission as well that you pay your broker, if you pay a monthly fee to your broker, whatever that is. But your expenses, one of your expenses is your losses. So when you take losses, you need to stop seeing them as mistakes. You need to stop seeing them as negatives, and you need to start seeing them as expenses that every profitable business takes. If over a course of a year we generate $100,000 trading, right, and we have, let's say, $30,000 in losses, all right, and then let's say we have $5,000 in commission or whatever, so we're left with $65,000 pre-tax income. Okay, you have to stop seeing those $30,000 as losses, and you need to start seeing it as an expense, and you need to start seeing your income as an income statement, right? So you have your revenue, then you have a bunch of expenses, then you have your pre-tax profits, then you have your taxes, and then you have your post or after-tax profits. The same thing has to happen with your trading, and until you start to internalize that thought, you're never going to be able to handle those losses, because you're going to continue to see those losses as mistakes or as errors or as something that you're doing wrong. And in reality, every single professional trader takes losses, and it's okay. Because the professionals, we know that when you take a loss, it's not a big deal because it is a business expense. All right? So now let's break that down. I had talked about how you need to know your numbers. Right? And I had talked about how we're trying to create a strategy that as close to guarantee to generate a profit. And in order to do that, you need to backtest. You need to make sure that your strategy works on whatever stock or whatever asset you're trading. Now, when I say whatever asset, it could be stocks, Forex, it could be day trading, it could be swing trading, whatever your style and whatever asset you're trading. On top of that, you also need to, if you really, really want to do backtesting the right way, you should backtest each individual stock, each individual currency pair, each individual whatever that you are trading, because that is going to give you the best results. So when we backtest, we can come up with what? We can come up with our accuracy. So out of 100 trades, how many we get right? Out of 100 trades, how many do we lose? So many people talk about 80% accurate or 90% accurate strategies. And so many people forget that in reality, when it comes to trading, a 90% accurate strategy does not mean it's going to generate money or more money than, say, a 20% accurate strategy. And what I mean by that is, if we have a strategy that's 20% accurate, okay, that means out of every 10 trades, you only win 2. But every time you're right, you generate $100. We'll just keep the numbers small, just so it's easy to understand. So every time you're right, you generate $100. And when you're wrong, you lose $10. Right? So with a strategy that's accurate only 20% of the time, it means you win 2 out of every 10 trades on average. It means you generate 100, then 100, and then 8 of those trades are going to be $10 losses. That means you make $200 and you lose 80 every 10 trades. That is a very, very profitable trading strategy. That is an extremely profitable trading strategy. And at that point, all you need to do to make money is scale up your positions and grow your account. Right now, on the flip side, everybody's chasing this 80-90% accurate strategy. If you have an 80% accurate strategy, but every time you're right, you only win $1. And every time you're wrong, you lose $2. Right? So what at that point, you win $1. So over 10 trades, you win 8. And then over 10 trades, you lose 2 times 2, which is 4. At that point, your strategy is a lot less successful and a lot less efficient than the strategy that only is accurate twice. They're both good strategies and they both generate a profit. But let's increase that, because I know a lot of times, and this is where a lot of people go wrong. They see that 80-90% accurate, that this strategy is going to be accurate 80% of the time. They jump into it and they don't calculate their numbers. They don't run the back test. They don't do anything. They just start trading. And let's say, what happens if this happens? What happens if you are accurate? Let's say you're accurate 9 times. So let's say your strategy is accurate 9 times out of 10. And every time you're right, you generate $100. So for every 10 trades, you're right 9 times and you generate $100 every time you're right. So that's $900. But that losing trade, let's say every single time that you take a loss, you lose $1,000. Right? So that means your win to loss is 0.1, or your loss to win is 10 to 1. That by itself, yes, you have a great strategy that's accurate 90% of the time, but that loss that loses you $1,000 is going to wipe your profits. Now, there's 2 reasons why this happens. Either one, it's part of the strategy, it's baked in, right? Which means that the strategy is not profitable and it should not be green-lighted to trade. Or 2, you're taking that huge loss because you're not controlling your drawdown, you're not controlling your risk management, and you have pretty much no risk management strategy. So that's one of the 2 options. One of those is fixable. One of those is not. If you've back tested, and in your back testing, you include risk management. And at the end of the day, even with the risk management, on average, out of every 10 trades, you lose 1, and out of every 100 trades, you lose 10, and the average loss amount is $1,000, and the average win amount is $100. You're very close to a profitable trading system, but you're not there yet, especially when you include commissions and other things of that nature. So it sounds good on paper. All these people talk about 90%. It sounds good on paper. 80% accurate, 70% accurate strategies. It sounds good on paper, but unless you run the numbers, you don't actually know if that strategy is going to make you money or not. All right? So that's why I really don't like when people say, yeah, I have a 90% accurate strategy, or, oh, you only have 20% accurate strategy, your strategy sucks. Look, the turtle traders had a strategy that was accurate around 30% of the time. The turtle traders, if you don't know who they are, look them up. They're very, very successful, led by Richard Dennis, and they used a strategy that was only 30% accurate. So what I want you guys to stop doing is stop chasing these strategies that are always going to be right. Because 1, they don't exist. And 2, the ones that do exist, just because they're 80 or 90% accurate does not mean they're going to generate you a profit. So what you need to start doing, and I know the reason why you guys don't want a 30% accurate strategy. You guys don't want a 40% accurate strategy. And the reason is because taking 4 wins and 6 losses out of 10 destroys your will to trade. It destroys your ability to trade. You feel down and you feel depressed, and you don't like losing. And the reason is because of that psychology that we talk about all the time. at Finance and Chocolate that really a lot of these things on the outside world that work in a job and stuff, they hold us back from trading. We've been indoctrinated. We have been indoctrinated by society, and the things that work in society, I'm not saying they're bad. They work in society. Knowing that mistakes are bad, that works in society. Having quarterly, kind of like quarterly checkups with your job and stuff, those all work in society, and some of them are beneficial in trading, like doing quarterly checkups, but some of them are very, very bad for trading. Like every single time you take a loss, you feel depressed. The reason is because if you lose money for the company that you work for, or you lose money on a bad investment, or you lose money because you invested into something let's say you got into real estate investing and you lost money, or let's say you got into any sort of venture like that and you lost money. You're indoctrinated to feel terrible, because if you lose money for your company, it's bad. If you lose money for the household, if you have a family and you lose money somehow, whether it's gambling, whether you got in a car accident and it was easily avoidable, whether you broke your phone, whether you broke your laptop, if you're losing money, it's a negative. But we bring those indoctrinations into trading and into investing and into the business world, and we forget that trading and business in general is a numbers game. As long as your numbers make sense, your individual losses don't matter. If you're flipping houses and you're profitable 5 out of the 10 of those that you flip, but you make way, way more money than you lose, keep doing it. If you run a business, and let's say you're a serial entrepreneur, so you're constantly just starting a new business, and let's say you're about 60% successful rate. So let's say 60% of the businesses that you start, let's say you start a bunch of small businesses. You're a serial entrepreneur. You're constantly starting businesses and selling businesses. Let's say 60% of them are successful or make you money. Most people are not going to. They're going to focus on the 40% that they lose. They're going to focus on the negatives because they've been indoctrinated and they don't understand that it does not matter. As long as the system works, as long as your business model works and is generating you more income than it is losing you, it's a profitable business model. In trading, it's the same thing. I don't care if you're only accurate 1 out of 20 trades. If that trade, and it's proven, it's back testable, you can back test the results over 5-10 years. It doesn't matter. Your accuracy does not matter. But the reason why you guys want to avoid the low accuracy strategy is because in your minds, you know it. You know that you don't like to feel that you lost a trade. You don't like having to close out a position for a loss. And that's why a lot of new traders hold their losses. They don't cut their losses early because they have this, it just doesn't feel right. Oh, I'm going to lose, so I'd rather just hold it. And that's why so many traders fail. So I hope this was informative. I know we covered a bunch of random little things, but that's kind of how my brain works. And I think that a lot of traders get caught up in the wrong things in trading. And I think when it comes to losses, a big reason or a big percentage of traders fail because they're not cutting losses, they don't like taking losses, and they're always chasing that strategy that's 90 or 100% accurate. Instead of chasing profitability, and instead of chasing percentage returns over a year or over a quarter, they're chasing money per day. I see this guy, they're making $300, $500, $1,000 per day, I want to be just like them. You want to chase percentages, and you want to chase percentages over a quarter, over half a year, over a year. If you're generating 40 or 50% return with your strategy, I think a lot of people don't realize it because they're so brainwashed with all this crap that's on the internet that, that's nothing. There are people who make 100% per week. It's just fucking garbage. If you make 50% per year every year, you are going to be a millionaire in no time. Look up compounding interest. Look up the formula to calculate compounding growth, right? 50% in the market is astronomical. And if you do that year over year over year over year, before you know it, you're going to be able to retire, right? But chasing the strategy that's always right, or chasing the money right now, you want the money right now and you want it consistently every day, that mentality is why so many traders get in this rut where every single time they take a loss, they feel like, it's the end of the world. They feel like, they don't know what they're doing. They need to research more. They need to take another course. They need to read more books. Look, I'm all for education. I think trading education is very, very important. But once you have the basis, once you have the foundations, and you have a decent strategy that's back tested to work, at that point it becomes a mental game. And that is where most people fail, when it becomes a mental game. Because they don't have these kind of foundations, and they've been indoctrinated by the outside world to think that losses are bad. So anyways, I'm going to leave that there. I hope that was informative. Like I said, I'm going to try my best to post more on the YouTube channel. If you're not following me at finance_and_chocolate on the Instagram, I definitely suggest you do. I do a lot of live videos on there, a lot of my stories, post a lot on there. And then if you're not subscribed, I definitely would subscribe. This is a new channel. I really do want to grow the YouTube channel into something where there's a lot of free, good quality information, just kind of me just telling it like it is, just kind of explaining how my mind works when it comes to the market. And hopefully you guys can learn something from this. You guys and gals, everybody who watches this, hopefully you can grab something from this and you can improve your trading. Also, definitely I would check out financeandchocolate.com. Lots of good quality information on there. Lots of free content on there as well. So definitely check that out. I will be posting much more often. I'm going to try to do once or twice per week, every single week. As we always say here at Finance and Chocolate, trade smart. Use your brain. Don't follow your heart in the market. Follow your brain. Follow something logical that's back tested and that's proven. If you trade smart, you'll make money. If you trade emotional, you get passionate and you get upset and all these things, it's going to destroy you in the long run. You want to become as emotionless as possible in the market. So let's strive for that. Let's always strive for profitability, regardless of whether your strategy is 10%, 20%, 30%, 100% accurate. Let's strive for profitability, because that's really what matters. And let's strive for a percentage return year over year over year, because that's how that compounding growth takes effect, and that's how you really actually become wealthy. So I hope that was helpful. I hope this video was helpful. This is Derek from Finance and Chocolate. See you in the next video.